Hi everyone. I'm Toby Turtle, the official mascot of STO Summit Spring 2025. We're excited to share the recorded sessions from the world's leading summit on security tokens and real-world assets. Now, let's dive into today's talk from one of our global leaders. Hey Augustine, over to you.
Please welcome Mike Reed and Lexi Perry from Franklin Templeton for a fireside chat on their RWA strategy.
All right, I just want to dive right in since we don't have a ton of time today, but thanks so much for joining our session. As Augustine mentioned, I'm Lexi. I'm a relationship manager with our digital assets team. And joining me today, I have Mike Reed, who is Senior Vice President and Head of Digital Asset Partnership Development for Franklin Templeton. Welcome, Mike.
Thanks, Lexi. Good to see you.
You too. Okay, so since we only have a few minutes today, let's dive right in. Today, I really want to talk about tokenization, real-world assets, and also unpack a little bit on Franklin Templeton's strategy. So, Mike, can you give us some background? I know you've been at Franklin for a long time. You've kind of been in various roles in capital markets, but have spent quite a bit of time building out our partnership development team. Can you give some background on how Franklin Templeton, this large multi-trillion-dollar asset manager became engaged in this space of tokenizing traditional assets?
Yeah, sure, Lexi. I think our secret sauce really lies in our CEO, President CEO Jenny Johnson. Jenny used to run ops at our firm long before she was president and CEO. So when you look out at the CEO landscape and you think about CEOs and what they really care about, there's very few who actually care about ledger efficiency. And when we first started talking to her about that as a team in the late 20-teens, Roger Baston, who actually leads our digital asset effort, was the one who first talked to her about it. She was intrigued and really wanted to find ways that we might be able to, use some of those operational efficiencies in our overall business. And we first looked at mutual funds. Finance is nothing but a series of ledgers. That's what we have all over the place. But a mutual fund itself has really a ledger of the holdings and a ledger of the holders of the product. And so we thought what we would do is tokenize the ledger of the holders of the product and how they move assets, buys, sells, income payments, things like that over time. And we were all in fixed income at the time. We chose a money fund specifically because it was part of our group. We hired a bunch of developers, built a digital wallet infrastructure, built an on-chain transfer agent, and began offering our product publicly a couple of years ago and have kind of been off to the races ever since.
Yeah, I mean, super interesting. I think, obviously we've seen a huge kind of influx of institutional adoption in this space, but super interesting that was sort of our first introduction to digital assets and tokenization. Can you share a little bit more?
Lexi, like in all fairness, even more interesting, or whatever, even a bit more of a weird factoid about our group is I remember maybe 15 years ago now, Roger coming into our trading floor and saying, "Has anyone heard of Bitcoin? Because my son just won a bunch of it playing Call of Duty online." So that was really, kind of right around that time when Bitcoin was priced pretty low. That was when we first started to dive in. And then with the launch of Ethereum, smart contracts, programmable money, all those kinds of concepts, cash flow direction, we were all in fixed income. Cash flows were natural for us. So it's really this like slow, natural progression into this space. And, once we started learning more and more about it, it all became kind of apparent what the path was.
Absolutely. Can you share, I know you touched on a little bit our, digital wallet infrastructure, kind of the tokenization platform we've built. Can you just share a little bit more about what Benji is, the Benji platform, and kind of everything that we've built within this sort of tokenization part of our digital asset strategy?
Yeah, sure. Well, I mentioned the digital wallet infrastructure we built. We've actually built that digital wallet infrastructure on multiple blockchains. We have live wallets on Stellar, Polygon, Aptos, Avalanche, Arbitrum, Base, ETH mainnet, and most recently Solana. And really what we, kind of the strategy there was to meet our investors where they are. And so we know that these blockchains have big communities. The communities are very passionate about the chains on which they operate. And we wanted to be able to proliferate within all of those different chains with our product. So it was really like we have a tech suitability framework that's public, that's listed in our prospectus. So if anybody's curious about how we think about blockchains from a technical perspective, it's all there in black and white. from a business development perspective, really, again, we're just looking to see where there's a potential for us to be able to partner with as many projects and people as possible within the blockchain infrastructures that we operate.
Yeah, that's super helpful. I think frames the next question that I wanted to ask you as well, which was, I know you lead partnerships for our digital assets team, specifically strategic partnerships. Can you share a little bit more about how you think about that strategy? You sort of touched on, we want to provide as much optionality for, our investors and for different ecosystems. How do we think about kind of continuing to proliferate that and kind of how you're thinking about the partnership side of things?
Yeah, I often tell people our job is to go and find people who are doing interesting things and see if we can do interesting things together. Sometimes people invest in us, sometimes we invest in groups, sometimes we do tech builds together. We've really got a pretty comprehensive strategy around partnerships and where we're looking, but what we're looking for is real synergies. So we if someone does exactly what we do, we're already doing the same sort of thing, so there might not be a partnership opportunity there. But if somebody can complement what we're doing, or we can complement what they're doing, then we might do it. So some examples of that, in our space, for example, KYC is super important. And I've attended many sessions on people in this space thinking about KYC and talking about it. In fact, one of the sessions I attended quite recently, a month or two ago, there's about 60 people in the room, and the KYC talk was the most passionate and elongated discussion of the day, which was pretty interesting. People who operate in that space and how they think about KYC solutions. There is no homogeneous KYC framework for all of these assets. And so people are trying to solve for that with really interesting ideas and solutions, but adaptability is really the key there. So thinking about those kinds of things is what we do. Really think about finding people who can complement what we're doing, or again, we can complement what they're doing.
Yeah, no, I think that's a really great example. Can you give some other kind of use cases? I know, our Benji platform, we've been proliferating in tons of different ecosystems, and I think a lot of the kind of partnerships that we, develop or become a part of are super organic. And we uncover, new use cases, new efficiencies. Can you share just some of maybe your favorite examples of, use cases or even partnerships that we've become involved in?
I want to go back to something you said first, which is the word organic. I think that the two words that I think about the most when I think about our platform are organic and authentic. And organic in exactly what you said, which is the way that these partnerships develop a lot of the time is very organic. We meet people and they say, oh, you should talk to this person, they're doing something interesting. And we kind of partner that way. Even our growth in the space, as you learn about blockchains in general, first you learn about one, then you learn about cost structures, you learn about transactions per second, you start to learn how there's some differences in them and where they might be able to operate. You learn about different token standards, and we're actually trying to build some of those standards ourselves that can be utilized across the industry, but it's all very organic in terms of how it grows out. And then by authentic, what I mean is, we operate, we're not just builders in this space, we're also investors in the space. We offer multi-coin portfolios to investors. We have a VC team as well in the space. We operate validator nodes across, I believe, 11 different chains currently. And it's all about actually being in the space. Even our asset itself, unlike many other assets in the space, we don't run a mirrored book of records off-chain and reconcile those on-chain. We mint the authentic asset on blockchain directly, which means that the asset can benefit from all the technology that's embedded in blockchain. It doesn't have to reconcile with traditional banking hours and things like that as it moves around in the ecosystem. So, you asked about functionality. Really, something that we do with our asset is we think about, it's not just buy my money fund. It's really how can this asset complement the things that you're doing. So, for example, we have a VC client who likes to think about funding portfolio companies in Benji token instead of in traditional fiat, because in the world that we all operate in, you would have your dry powder sitting in a money fund, you'd sell out of that money fund, transfer the fiat over, and then hope that your portfolio company invests in something like a money fund. But that whole move takes 3 to 5 business days. And that whole time, you just have cash drag. You're not earning anything on your money. In our construct, you can instantly transfer a yield-bearing asset that, in a lot of cases, these VC investors want their portfolio companies to own in their treasury. So there's really this added benefit to the functionality that blockchain systems allow that we've been able to bake into our asset that makes it a really, kind of a better funding mechanism for groups like that. So when we think about, again, when we think about our asset, it's not a case of there's a ton of money funds out there that exist already, that are already embedded in the existing framework and things like that. We like to think about our asset as a financial tool that can be used in these ecosystems. And the way that we enable functionality allows that tool to move around a lot more fluidly.
Yeah, no, I like that. As you were talking, I was just thinking about how the other day I was using Venmo, and Venmo takes 3 days to get, the money back into your bank account. So if I could have something like Benji that allows me to get real-time money, right? Real-time transfers thanks to blockchain. I mean, at the end of the day, the thesis for it is better, faster, cheaper, right? So kind of
Absolutely,
ticks
yeah.
all those boxes. Okay, I know we only have a couple minutes left. Let's just end off on what are you thinking about looking into the future? How do you see more traditional players like Franklin Templeton, institutional players becoming engaged in this space? What's next for us as well, if you don't mind touching on that?
Yeah, so I think it's an apolitical statement to say that the current administration is a lot more favorable towards our space and our assets than the previous administration, which means you're probably going to see a lot more players like us getting involved in the space. And you have, even within the last several months, you have seen that. I think things like SAB 121, for anyone who doesn't know, there was this accounting bulletin here in the US where anyone who custodied crypto had to 1-for-1 that asset on their balance sheet, which basically meant that nobody wanted to custody crypto because they were afraid of, basically it kills your potential for return on the asset. So because you just have all this cash drag sitting on your balance sheet doing nothing, and then again, it ends up being this massive cash balance you have to hold. So nobody was really engaging in the space. With the repeal of that opens up the space for custodians quite a bit, and we already have some great partners in the digital asset custody space who focus just on these assets. I think there's probably going to be some traditional custodians who start to look more heavily into offering, solutions in this space. I think that's very likely to happen in the coming years. And then I think also just as people start to reimagine, that's like a big thing that's happened for us, and I think it's probably happened for a lot of the attendees as well, is this idea that you kind of have to reset your expectations for money and how it moves and what it can do for you. And so as we've done that, we've been able to reimagine like the functionality things that I talked about earlier, and you were talking about how the benefit you'd see even in your own, day-to-day life. I think if you kind of clean the board, go clean slate on all these kinds of things and reimagine how money can move, it's pretty astonishing if you use this underlying technology. So I think that's kind of where the future is heading. A lot of large financial institutions likely to get a lot more involved in this space. And then for us, we offer Benji across a variety of geographies now. So for global investors, we have some solutions for certain jurisdictions. So we're really excited about that. Also more functionality, that as we think about our asset and how it can continue to proliferate, adding more functionality to it to bring it closer to kind of the end vision is something that we're really focused on right now.
That's awesome. Yeah, and I think it makes a lot of sense with kind of the new administration and hope to see more traditional players enter the space and, get their feet wet. But also in terms of what we've got next, I think it's really awesome that we've kind of built this tokenization platform that's almost like a SaaS solution for someone who wants to tokenize traditional assets. So, who knows what's next?
Yeah.
All right,
Again, I think the key there though is like that authentic part of it. Like you have to mint the assets authentically on chain so they can be used in
totally.
like collateral. Nobody wants phony collateral. Nobody wants to hand in a sticky note that says IOU on it and have that be the collateral. They want the authentic collateral. And so it's only achievable with assets like ours that are minted authentically on chain.
Could not agree more. Well, Mike, thanks so much for your time. It was a pleasure getting to chat. I know this was a little bit shorter than we had anticipated, but appreciate you joining and digging into kind of tokenization, RWAs, and Franklin Templeton's strategy. Just real quick before we close out this event, I just want to tell the audience to keep up with us on our X account. The @ is at FTDA_US. We're posting tons of research content, our views on the space, and even, some fun, exciting posts like memes thrown in there. So
And
thanks so much
that's
for
run
joining.
by us too, right? Like that's run by us. That's
Totally.
not a third party department. So like we're the ones who actually publish that info. If you see it, it's done by us.
It is indeed. All right. Well, thanks, Mike. Appreciate it. And I'm going to pass it back to Augustin to take it over.
Thank you very much, everybody.
Thanks for joining us at STO Summit Spring 2025. Stay curious, stay connected, and remember, the future is tokenized.